Hello everyone, welcome and thanks for watching the Market Report. This is Marcel Pechman, analyst and writer at Cointelegraph. The show debates the most pressing crypto topics and airs every Tuesday on the Cointelegraph Markets and Research YouTube channel. On today's The Market Report, sponsored by XGO, we'll be discussing why Bitcoin failed to break above $29,000 and crypto prices going down. Plus, whether or not Jerome Powell is lying about keeping interest rates above 5%. And lastly, what did Warren Buffett mean by the incredible period coming to an end? Don't miss it, and make sure to like and subscribe to the new Cointelegraph Markets and Research YouTube channel. We'll start by discussing an article written by Cointelegraph Research. Crypto remains hopeful as market moves sideways. Bitcoin continues to trade in a narrow range, and meme coins steal the limelight from NFT as views on the macroeconomic outlook diverge. On the basis of current market sentiment is a standoff between markets and policymakers. While the Federal Reserve Chairman Jerome Powell publicly stated that interest rates are unlikely to come down this year, the markets for risk-on assets have firmly priced in a pivot in the coming months. Okay, so first things first. Why is Jerome Powell stating that there won't be interest rate cuts in 2023? Is he trying to hide something, or is 90% of the market participants not objectively analyzing the situation? Well, first of all, the interest rates have been increased above 5% to its highest level since August 2007. Why would they make the cost of capital so high? To curb the inflationary impact from the $6.3 trillion injected during the so-called pandemic. This was done by printing money, issuing treasuries, and incentivizing credit by keeping near zero interest rates. The effects of a hyper-pumped economy are clear. Unemployment is at the lowest level in 40 years, and yet 42 million Americans are SNAP recipients, which means they're on food stamps. In some states, the number approaches 20% of the population. The reason? Inflation, as people were forced to choose between paying rent and utilities or food. Other issue caused by the higher interest rate is the cost of the $31.5 trillion US debt. That further pressures the US Treasury, which, by the way, is quickly running out of cash. So the higher the interest rate, the more the government have to pay for the debt holders. So that caused a whole clash between the government and the Congress, which is not letting the debt ceiling increase to be approved without having their demands satisfied. So the Congress has the ultimate power on increasing the debt ceiling. So they're telling Joe Biden, well, we can do that. We can increase by $1.5 trillion. But if we allow that, you're going to have to cancel that and that program that you're trying to do, which we think it's for getting more votes, it's for hiring more people for the government, it's ultimately not benefiting the economy. So if you cancel those projects, those programs, yes, we'll let you increase the debt ceiling. So it's a war between the two parties, and the government doesn't have majority of the Congress and Senate to approve it. So that's why there's this whole debate on the debt ceiling. Treasury President Janet Yellen is asking for everyone to quickly come to a decision because the money will run out by early June. But wait a minute, can't the government just reduce the interest rates and it solves the problem? It's a win-win. Less government debt repayment and more economic activity. Well, there's a bit of a problem there because it would further increase inflation, effectively pushing another 20 to 40 million Americans into social benefits, either because they're going to get unemployed or because the inflation will be so high that their income will be not enough to pay for the bills. So that's why Powell cannot say out loud that he's gonna make the population even more dependent on government aid, meaning he will not announce that interest rates will decline by the end of the year. Let's assume for a moment that the Federal Reserve is willing to keep its rates above 5% if Jerome Powell is telling the truth, letting the market collapse and unemployment balloon above 10%. What would happen to Bitcoin under this scenario? Well, my friend, we're talking about a 1929 crisis. So people would likely sell their assets, hoard cash, and short-term government bonds. In that case, Bitcoin will certainly feel the negative pressure and plunge below $24,000, maybe even revisit sub 20K levels. That's not something far-fetched, and it might be the only solution to avoid hyperinflation and the weakening of the US dollar, because the US doesn't need to grow its economy. It merely has to withstand the bad weather better than Europe, Japan, and the BRICS. So it all depends if the government wants to protect the dollar and let inflation run its course, or the other hand, if they're telling the truth and they're gonna keep interest rates up, then there'll be a recession. But if they think that the US is in a better position than the other countries, the dollar will be protected by itself, because people will flight to the asset that they find more safe, which in this case right now seems to be the dollar and short-term government bonds. What you need to understand is there's a risk that Powell is telling the truth, and under that scenario, Bitcoin and the stock market will collapse. Maybe that's why Bitcoin wasn't able to break above $29,000 and caused the crypto prices to collapse over the past 2 days. So Bitcoin recently experienced a decline down to $27,400, which also brought the other cryptocurrencies down. As for the meme coins, including PEPE, investors need to understand that even if we stay below $30,000 for a long time in Bitcoin, there will be periods of sector rotation, meaning traders might sell Bitcoin and Ethereum in large caps to try to find gains in smaller altcoins. It doesn't necessarily constitute an altcoin rally, because there hasn't been a case of 10 or 15 out of the top 100 coins rallying 20-30% in a week. So there hasn't been an altcoin rally, just a sector rotation. In the end, PEPE will find its own level, which might be 400 million or 4 billion. No one knows. The truth is, crypto is a social phenomenon, as money. So you can't really prove that a digital asset should be trading at a certain level. Markets will ultimately decide after there's enough open interest on futures so sellers can bet on the price decline, which isn't the case on PEPE right now. The open interest on futures is pretty small, so it takes time to adjust. Just to highlight, that's my own opinion and does not constitute financial advice, investment advice, or even reflect Cointelegraph's official view. Now, on to the next topic, covered by Yashu, who will dissect what has been said by the Oracle of Omaha, Warren Buffett. Warren Buffett dumps $13.3 billion in stocks, a warning sign for Bitcoin and risk assets. Berkshire's cash holdings increased by $2 billion in the first quarter, signaling decreasing confidence in risk assets. The 92-year-old investor, who has credited the US economic growth for the success of Berkshire Hathaway in the past, is no longer optimistic. The majority of our business will report lower earnings this year than last year. The incredible period for the US economy has been coming to an end over the past 6 months, he added. Berkshire raised its cash reserves by $2 billion to $130 billion in the first quarter, the highest level since the end of 2021, when equities entered a bear cycle. Okay, so what you need to understand is Berkshire Hathaway is a holding company. It's not a hedge fund, meaning there's no way he can sell 50% of his portfolio by derivatives betting on the short side, betting that the stocks will collapse. the only thing they can do is increase the cash position, meaning they'll no longer buy companies or invest in companies, hoard cash and short-term government bonds. So when the market crashes, when the prices decline, even if there's not a crisis, but across the span of 2 years, 3 years, 6 months, if the price declines, he has cash at hand to increase positions on the stocks, on the investments that he's willing to hold for long term. Moreover, a single company is sitting in $130 billion of cash and equivalents, meaning they're likely expecting a correction, or they don't have the trust right now. They don't have the willingness to add positions right now. Maybe he sees a war risk, maybe he sees a recession risk, it doesn't matter. But Warren Buffett, one of the wealthiest, the most profitable investors over the span of the last 40 years, is telling you that he's no longer confident in the stock market. Make no mistake, Warren Buffett is the poster child of value investing. So he's throwing the towel by literally increasing the cash position to its highest level in 18 months. So you should listen. Berkshire is preparing for a period of lower earnings, which doesn't require a full-blown crisis to happen. So he's not saying that there will be a huge crisis underway. We don't know it for sure. What he's saying is risk assets, including the stock market, will have been suffering over the past 6 months and should be priced lower because earnings will decline. In our third and final article, we'll visit my colleagues Joe Hall take on Bitcoin fees rate going above $10 and its consequences for centralized exchanges. Bitcoin fee spike spurs shift to Lightning Network. Binance and Coinbase line up. The recent surge in Bitcoin transaction fees has lit a fire under one of the largest crypto exchanges to upgrade to the Bitcoin Lightning Network. Following a second halt in withdrawals, Binance announced it would work on enabling Bitcoin Lightning Network withdrawals, which will help in such situations. Several large exchanges have previously integrated the Lightning Network, including Bitfinex, River, OKX, and Kraken. Okay, but why have the fees in the Bitcoin network suddenly increased? BRC20, a token standard that is inscribed in Bitcoin's taproot block space, which allows any kind of data to be saved, to be stored on the network. That space was originally designed to allow more creative transactions and security functions for the second layer solutions, such as the Lightning Network. What happened is that a few projects offered free mint on the BRC20 tokens, so all the user had to do was pay the Bitcoin network transaction fee to register, to mint, to create their BRC20 token. That caused a huge rush, which was probably incentivized, paid by some actors. But that doesn't matter. The point is, the Bitcoin network is working as designed. Fees are intended to keep the spam out. So these guys are paying a hefty sum to keep their game, which may or may not continue for the next few days or weeks, but won't be able to sustain for months. On the positive side, more exchanges are integrating the Lightning Network, so the second layer solution for cheap and instant transactions on Bitcoin, which in the end is great news for its users. Well, that's it for today. Don't forget to visit Markets Pro, the professional Cointelegraph alerts platform. Our proprietary indicators have been giving profitable alerts for months. There's a 20% discount link in the video's description. Today's show was sponsored by XGO. Don't forget to like and subscribe to the new Cointelegraph Markets and Research YouTube channel. See you!